Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil and treasury yields jump as the United States and Iran launch fresh tit-for-tat attacks, reviving concerns of higher inflation and interest rates. Meanwhile, confusion abounds as both sides issue conflicting statements about whether the Strait of Hormuz is open or not. Plus, SK Hynix tanks dragging the Kospi and broader Asia lower. That's amid profit-taking after the memory chipmaker's highly anticipated U.S. trading debut. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Monday. A lot to get through today after the happenings over the weekend in the Middle East. But before, let's get into a picture of what equities are looking like. U.S. futures, 0.5% lower. Now, there's a lot at play here. Earnings season kicks off again. We have the likes of Goldman Sachs and JP Morgan reporting on Tuesday. Two themes at play still: tech and the geopolitics from the region. We're keeping an eye out on SK Hynix ADR listing in the United States. That debut on Friday, 13% higher. But in Asia this morning, it's actually tanking, 13% lower, dragging down the MSCI Asia Pacific and the Kospi in South Korea. We've got Winnie in a second to talk to us about the weaknesses there. So we're keeping an eye on the AI rally, whether those earnings are going to solidify the argument of whether that AI rally that we've been seeing over the past quarter is justified or not. But the big story and the big gain this morning is in Brent crude prices, 4% higher. We're getting closer to the $80 on the barrel mark. Yet again, fresh escalations into the early hours of the morning. Just moments ago, Iran saying that it continues its attacks in the region against allies of the United States, namely Kuwait, Qatar, and Jordan. And then we're also keeping an eye on the yields, the 10-year yields in the United States, 2 basis points higher. We've got economic data out of the United States tomorrow, CPI numbers for June. But we're also keeping an eye on the rate-sensitive 2-year treasuries, which climbed 3 basis points earlier. Now, this is important because it's the highest level since February 2025. U.S. dollar is strengthening against all G10 currencies. Precious metals, gold is dropping, silver is dropping. And so we're keeping an eye out on those precious metal assets, similar to a position we found ourselves in a few months ago. But on the weakness that is happening across Asia this morning, we've got Winnie Su in Hong Kong for us. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Really, we are seeing Kospi here dragging the broader region lower with the gauge here down about 7.5% to its lowest in about a month. Now, you just mentioned that biggest drag still comes from SK Hynix, which is down about 14% here after that ADR listing on Friday. Now, some say that it is just profit-taking after how the ADR listing jumped about 13% in the U.S., but others are actually becoming more cautious, citing a potential peak out in the memory cycle. And also, we are seeing local brokers flagging that the second quarter earnings might be a miss for the company. So that's also weighing on the Korean stocks here today. Now, you flip the board and take a look at how that's impacting the broader region, because we have MSCI Asia here extending losses to 1.8%, also headed for the lowest in about 2 months. Now, that sentiment is also weakened by how we are still seeing higher oil prices driven by the geopolitical tensions, but overall, tech stocks leading declines, with Japan's Nikkei 225 also lower by more than 2%. The bright spot, though, is actually in Taiwanese stocks. We are seeing the gauge really flat-ish here, and that is a bit of a wait-and-see mood ahead of the June sales data that is expected later today, and it was already postponed due to the typhoon last week, so we will be closely watching out for that as well. Back to you, Abir.
All right, so at least one bright spot there. Winnie Su in Hong Kong with those market updates as usual. Now let's turn back to the regional story. Oil is jumping after the U.S. and Iran launch fresh tit-for-tat attacks. It comes as both sides issue conflicting declarations over whether the Strait of Hormuz is open to shipping. Washington's attack was the 4th U.S. strike in about a week and followed one of the heaviest bombardments since a June agreement intended to halt the fighting. For more on this developing story, we're now joined by Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, where does this latest escalation leave us in terms of the wider talks, the technical talks?
I mean, not in a good place is the short answer. And it's the speed at which it's happening and the fact that there clearly is escalation. We don't have specific numbers on what the Iranians are throwing across, but we do know from CENTCOM, that is the US military, I think on the first day of the most recent round, it was something like 80 targets, then 90 targets, then 140 targets. We don't have the numbers for the most recent rounds, but one would presume it's of that similar order. So, you tot it all up, and it starts looking increasingly like full-scale hostilities again. We're not quite there yet, it has to be said. Where exactly is the off-ramp here? What exactly is the mechanism under which they're both going to agree to sort of step back and start talking again? Really not clear. Yeah. And all the rhetoric we're seeing coming out of both sides is increasingly hostile.
Yeah, and I was talking to our colleagues in Asia earlier, and they were pointing out that when it comes to the Strait of Hormuz, two things can't be true at the same time. Yeah. The U.S. says it's open for shipping. Iran says closed until further notice. What are we seeing in terms of the movement there?
So on Saturday, we could observe very little. But again, that comes with the caveat that increasingly the ships are turning off their transponders again. So we don't necessarily have visibility. Short of sitting on the side of Hormuz itself with a pair of binoculars, it's very hard to tell what exactly is going through. So there's usually a lag when we figure it out. Again, one side is saying a few ships are getting through. I think there was a report overnight that something like 20 ships went through. Whether that's true or not, I don't know. The Iranians are saying nothing's going through. The truth is probably somewhere in between. But I would imagine you would have to be a very brave ship captain right now to be willing to navigate the strait.
And what has the response been from the GCC? I mean, Qatar, up until less than or a little bit more than a week ago, was mediating those talks, and yesterday it was attacked. So what has been so far the GCC response from the countries that have been attacked?
So again, we don't have great visibility on that. What we suspect, because we know it's happened previously repeatedly, is that they're working behind the scenes. They tend to do things a lot less publicly than, let's say, the Iranians or the Americans, which is not terribly difficult. But I think what we have to remember is that really they were the key parties, obviously along with Pakistan and others, of getting to this place in the first place. In other words, to getting some sort of resolution going. They are very effective mediators under very difficult circumstances, so one would presume they're doing the same thing now, but we don't have hard evidence of that.
All right, Stuart, thank you, as always, for those timely updates on this fast-developing story. Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa, and Russia. Now, let's carry on this conversation about what is happening in the region. We're now joined by John Sfakianakis, chief economist and head of research at the Gulf Research Center. John, good to have you on this morning. It is a fast-developing situation. We're hearing these headlines from Iran up until moments ago. So with this escalation in the rhetoric from the region, where do we go next?
No, thank you for having me, Abir. Nice to be with you. It's difficult to tell because both of them are trying to see who kind of blinks first. And it's over the strait. This is contested over who controls the strait. So there is a lot of brinkmanship, but also there is a lot of bravado that is going on. I think that they will de-escalate. This is not yet the time. I think that we will see a few more rounds of peace and war, a little bit of peace, a little bit of war. Again, the MOU is kind of structurally difficult and hollow in that sense. And we're going to see more of the same. But I do expect that there will be intervention from Qatar, Pakistan, and others. Cooler heads will eventually prevail because oil is beginning to jump to close to 80, and then from there on, higher than 80. So I think they will de-escalate, but it is a contested area, the strait.
The strait, that was exactly going to be my next question. It does feel, and I was just talking to Stuart about how two things cannot be right at the same time. Iran has asserted dominance over the Strait of Hormuz. The U.S. is trying to help ships through the strait to carry their crude exports and other shipments as well. So when it comes to the Strait of Hormuz, who really do you think has the upper hand at the time being?
Well, right now, neither. Both of them are trying to vie. They're trying to contest their sovereignty, meaning the good side versus the bad side, whatever is the pick you make. But Iran certainly is back on the table, and they're trying to make it obvious that they want to control. It's not necessarily just the fees, but it's the issue of sovereignty and control and this sense of empowerment that Iran has in the regime over its population. So they want to demonstrate that by having control. On the other hand, the US clearly has a way out, which is the Strait of Hormuz to be used through the Omani shore, and that has been working quite well. More than 600 vessels have gone through, but that is being contested. So if Iran continues to attack vessels that are using the Omani shore, I think the US is going to attack them vociferously, and they're going to be pounding. And we're going to go back to 2.0, an invasion of 2.0.
So is that actually a base case scenario? Do you think that we're going to go back to a state of full-on kinetic warfare where the entire region is dragged? We're seeing oil closer to $100 a barrel. Do you think that, given the current circumstances, that is a possibility at the time being?
Oh, I do see it, but not yet. This is on Iran's court. Okay. The ball is on Iran's court. If they do continue, I think the U.S. is going to go back and they will do a lot of kinetic kind of 2.0 attack. So I think the Iranians are underestimating the ability of President Trump to go back. They believe that because of the November elections, there will be very little war going on, and they think that this is going to be pushed down the road. I think if you do underestimate President Trump, you end up losing. And this is where we're getting at right now.
John, just to bring the GCC into this, because they have been bearing the brunt of all of this, even Qatar, I mean, again, we were just talking about how up until a week ago, Qatar was mediating, and yesterday it was getting attacked. So when it comes to their economic model, the state of play as it stands now, this, war, but not really a full-scale war, what are the long-term disadvantages or what are the long-term damages to the economic models that these countries have been trying to prevail over the past few decades or so?
Yeah, thank you. It's a great question. I mean, you want to diversify. You want to, in many ways, de-harmonize, so to speak. So you want to delink your dependency from the Strait. Very difficult, easier said than done. But the UAE will do it. Saudi Arabia will do it. Oman has been quite successful and doing quite well economically right now. The difficulty is confidence, investors coming in, and this back and forth, little bit of peace, little bit of war is not working out quite well. So you need to have stability. But overall, I think for these countries, they will do well. For Qatar, it's more complicated. For Kuwait, it's more complicated. For Bahrain, again, it's difficult. So you need to have proper peace. Right now, we have neither war nor peace.
Yeah. Yeah. All right, John, we're going to have to leave it there. John Sfakianakis, Chief Economist and Head of Research at the Gulf Research Center. Now, still ahead, UTI International tells us why they think Fed Chair Kevin Warsh is a dove in hawk's clothing. This is as Treasuries drop in response to the latest round of strikes by the United States and Iran. More details ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Oil and treasuries are in focus after the United States and Iran launch a fresh round of strikes against each other. This comes amid renewed concern that higher energy prices will keep inflation elevated and interest rates higher for longer. So to discuss more on the story, we're now bringing in Global Head and CEO at UTI International, Praten Jagwani. Praten, good to have you on this morning. Thank you for joining us on the table. I was taking a look at your notes, and we were just talking about this, the classification of Kevin Warsh as a dove in hawk's clothing. With the latest escalations in the Middle East, we've got a June CPI report coming out this week from the United States. What do you think will make the case for Kevin Warsh? Do you think he'll have to hike rates?
He is playing it really clever because, yes, presently the inflation does seem to be fairly sticky, but there already are signs, not just in the US, but globally, of persistent destruction of demand. And that would force the hand of the Fed of whether to support Main Street or Wall Street. You know, what's happened over the last couple of years is that media has conflated the economy with the markets. And every time you speak to anyone in the Trump administration about the state of the economy, they refer to the markets. Hey, look at the markets. That's the barometer of health. And nothing could be further from truth. Because we have seen even companies like Walmart, Walgreens, McDonald's cut prices. That's simply because the consumer cannot afford all of that. So demand destruction across the world, Europe, China, Japan, US, that's a reality. When demand destruction becomes a bigger problem than inflation, all the central banks have a dilemma. Who do you support more, markets or the economy? So far, the data would seem to suggest that central banks are leaning in favor of inflation management rather than growth management. This could flip really quickly. Yeah. We've already seen the Atlanta Fed data come out on GDP, and it's falling off a cliff. So the economy really is on its knees. It's living on a prayer. So I would imagine by the time, by end of the year, Fed is going to hold through, but then the next move is a cut.
Okay, let's turn to the markets. I mean, the Fed will have an impact there, but let's turn to the tech play, the tech story. We're seeing divergent growth. We're seeing divergent policy. And you also mentioned those. We're also seeing concentrated asset allocation. So in one question or another, do you think that, first of all, do you think we're in a bubble and we're set for a little bit of a disaster when it comes to those concentrated allocations in specific names?
Unquestionably, we are in a bubble. See, the whole promise of artificial intelligence was it's going to make everyone's life better. And the truest test for me would be to see rising profitability, rising profit margins for all companies. But there's a case of chalk and cheese between the Mag 7 and S&P 493. The profit margins of the remaining 493 companies have been flatlining for 3 years. So where is the promised gain of all this AI investment? I'm not dissing AI. AI is going to be profoundly useful for civilization, but the amount of money that is chasing AI returns right now, that more likely than not is going to be disappointed.
So that's the question. How does an investor now distinguish between real AI productivity and then the hype?
That's the billion-dollar question now. It is really hard to do asset allocation because global capital is mercenary. Yeah. It's been shifting asset classes, segments, countries so rapidly, it is hard to make the classic well-diversified global allocation because correlations pretty quickly go to one. And even within the AI trade, you've seen it go from CapEx, hyperscalers, semiconductors, DRAMs. There is a lot of correlation and concentration in this particular trade. I suppose you could, when this corrects, and it will correct, when the earnings don't match up, you will get defensives, dividend yields, even bonds, maybe at the short end, then gold.
Okay, so that's something to look forward to in the upcoming earnings season. But just finally, on the geopolitical situation, I mean, we're seeing the latest rounds of escalation. If we remain in a status quo of some sorts, no war, but no peace, really, do you think the market will still move over that the way it has over the past 3-4 months?
No, so global capital is going to be risk averse. Political and policy uncertainty, they kill markets. Markets can absorb any amount of bad news, provided it's certain bad news. It's the uncertainty that markets dislike completely. And a phase like that, it's going to hurt markets.
All right, Praveen, we're going to have to leave it there with geopolitics hurting markets. That was Praveen Jagwani, Global Head and CEO of UTI International. Now, for a look at some of the other stories we're following, Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit names former Apple engineer Chang Liu alleging he downloaded confidential files and continued accessing Apple systems after joining OpenAI. Apple is seeking damages and wants OpenAI to destroy any proprietary materials and redesign future products that include its technology. OpenAI denies the allegations. Bloomberg has learned that Nippon Paint has made multiple offers for Akzo Nobel's decorative paints business in the last month. Sources tell us the latest bid values the unit at about $8.6 billion and would reunify the Dulux brand globally while expanding Nippon Paint's footprint in Europe. We're also told Akzo Nobel has yet to engage with the proposal. And Bloomberg has also learned that SoftBank and PayPay are considering buying a stake worth several hundred billion yens in 7&I. Sources say the 7-Eleven owner may issue new shares to be acquired by SoftBank and PayPay. It signals a willingness by 7&I to surrender some control over its future in return for an alliance with key strategic partners. And coming up, an audit ordered by the president of Senegal has uncovered a hidden debt crisis. We'll have the details later in the program. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Qatar's former emir, Sheikh Hamad bin Khalifa Al Thani, has died at the age of 74. Sheikh Hamad transformed Qatar from a small Gulf state into one of the world's wealthiest nations, building its influence on vast natural gas wealth and helping establish the country as a major diplomatic and investment power. He ruled for 18 years before handing power to his son, Sheikh Tamim bin Hamad Al Thani, in 2013. In South Carolina, Senator Lindsey Graham died unexpectedly over the weekend at the age of 71. His death sets up a succession drama in the state less than 4 months before the midterm elections. The governor can name a replacement for the remainder of Graham's term, but state election law then calls for a special primary election. Meanwhile, Republican Senator Mitch McConnell has given an update on his medical condition, breaking a lengthy silence after public and political pressure. In a statement, he says he suffered a fall in June and contracted pneumonia that required hospital treatment. Now, before we head into the break, let's take a quick look at where asset classes are. Everything is in the red when it comes to equities. S&P future edging lower by the second 0.5 lower. Similar story in other U.S. benchmarks. And oil prices are edging higher because of that escalation from the Middle East. Now, coming up, as venture capital plunges in the Middle East, we'll talk to Philip Bahoshy, CEO and co-founder of private capital data platform Magnitt. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil and treasury yields jump as the United States and Iran launch fresh tit-for-tat attacks, reviving concerns of higher inflation and interest rates. Meanwhile, confusion abounds as both sides issue conflicting statements about whether the Strait of Hormuz is open or not. Plus, SK Hynix tanks dragging the Kospi and broader Asia lower. That's amid profit-taking after the memory chipmaker's highly anticipated U.S. trading debut. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abamar in Dubai. Still a lot to get through for the show, but another quick look at where equity markets are this morning. U.S. futures ticking lower by the second 0.5% lower now. We still keep an eye out on the beginning of the earnings season. Yet again, J.P. Morgan, Goldman Sachs set to report earnings tomorrow in the United States. We're also keeping an eye out on SK Hynix, its debut in the United States on Friday, 13% higher by the close. Although that is not the same picture in Asia this morning. It's actually 14% lower, trading in Seoul already. That's dragging on the wider benchmark, the MSCI Asia Pacific. The Kospi in South Korea dropping about 7% at this point. So the wider gauge is about 1.8% lower. But then the big story for us is, of course, in oil prices, 4% higher. Brent crude edging very close to the $80 on the barrel mark. Fresh escalations in the region up until the very early hours of this morning. Iran retaliating to fresh U.S. strikes by hitting countries in the region, including Kuwait, Qatar, and Jordan. Air bases there as well. So we keep an eye out on the movement of ships, tankers in the Strait of Hormuz for the time being. A standstill is what it looks like. And then we're also keeping an eye out on the 10-year yields in the United States, about 2 basis points higher. Fresh economic data out of the United States. CPI for June comes out tomorrow. We're also keeping an eye on the yield on the rate-sensitive 2-year treasuries that climbed about 3 basis points earlier in the day. Now, that's important because it's the highest level since 2025, February 2025. And then the U.S. dollar strengthening against all G10 currencies. Precious metals dropping, gold and silver dropping this morning. We find ourselves at a place that's very similar to a state of play that was the case in April or May because of those developments in the Middle East. But for the continuing weakness we're seeing in Asian equities this morning, let's check in on how markets there are doing. And we've got Winnie Su again in Hong Kong for us. Winnie?
Yeah, morning, Abir. You can see that Asian stocks really weak today. We are seeing a loss extending to 1.8%, and that is really mainly being dragged by the Kospi, which is down about 8%. Now, we just heard from the stock exchange that they have triggered that circuit breaker for trading to be halted for about 20 minutes after the gauge having slumped to more than 8%. So you can see that volatility and kind of the weakness in tech stocks really driving the broader sentiment lower, which is already impacted by the higher oil prices and the geopolitical tensions in the Middle East. So you can see that across the board, things are trading in the red. And also, we do have the stronger U.S. dollar weighing on currencies in Asia as well. Now, flip the board, we take a closer look at some of the tech names in Asia, because we just mentioned SK Hynix really here being the key drag on the Kospi and also the broader Asia market. Now, some say that it is profit taking after ADRs having surged about 13%. But interestingly, when you look at that ADR 13%, it's actually closing at the intraday low. So it gives you a sense of how sentiment has actually weakened towards the end of the session in the U.S. So that plus some concerns around how there might be a peak out in the memory cycle, as well as how expectations for the second quarter earnings for SK Hynix might be a miss. These are all weighing on the stock and the benchmark today. Now, when it comes to bright spot, we are actually seeing TSMC up more than 1%. Now, Taiwanese stocks were closed due to the typhoon last Friday, so coming back online, and that June sales expected last week is also postponed to later today. So we will closely be watching out for that, as well as the upcoming earnings from TSMC later this week for a sentiment check when it comes to the AI demand. Back to you, Abir.
All right, Winnie Su in Hong Kong for us. The Kospi in play this morning. It had entered a bear market territory last week at some point. Now let's turn to another story from the region. Private capital data platform Magnitt says Middle East venture funding fell 22% in the first half of the year, with actual deal count plunging by about 41%. Many of the deals were signed before the U.S.-Israel attacks on Iran, and big investors are backing away, and the real test will hit this summer. Joining us now to discuss the latest is Philip Bahoshy, CEO and co-founder of Magnitt. Philip, good to have you on. I was taking a look at your report this morning. Let me just cite some of the numbers that you know very well. $1.35 billion raised by startups in the first half, 214 deals, although we're seeing total funding 22% down, some other drops there. So behind the headline numbers, what is the story from the region over the first half?
Yeah, so I think globally, we've already started seeing a decline in the total number of transactions. Interestingly, that's been happening since 2021. But in terms of capital deployment, you have seen a pickup. Now, that's been skewed to big investment deals in AI, defense, and security. So that's the global trend. So the region is not immune to what's happening globally. Here in the region, there was already a decline in capital that was percolating from 2025, specifically here in the GCC, and total number of transactions has continued to drop. In fact, Q2 was the lowest level of transactions dating back to 2022. So the reality is, I don't believe that the impact of the war has come into the numbers yet. That will come in Q3 and Q4, but there has already been somewhat of a slowdown with focus on later stage deals over early stage transactions.
Okay, so that was going to be my next question, actually, the impact of the war. I'm sure a lot of people are asking you what the impact is. It hasn't translated yet, but when it does translate into this quarter and then towards the end of the year, do you think we're going to see even a bigger drop in the numbers?
Yeah, so Magnitt, the company, put out a research piece in the midst of the war, and we put 5 trigger warnings to look out for, regardless of the total amount of investment. Number one is international appetite for the region. A lot of effort from governments have been trying to attract international capital to the region, and given all of the geopolitical situation, will international investors continue to deploy capital? And in Q2 already, we've seen a decline in the total number of international participants. The second is late stage capital. Naturally, it's harder to get later stage capital when there's instability in the region, and we've already seen a slowdown at both early and late stage capital. And a third trigger is M&A transactions. How much liquidity, how many exits are happening here in the region, and we've begun to see that slowdown in M&A transactions. So there are kind of key triggers that we continue to look at to understand how it's going, but we anticipate heading into Q3 and Q4 a continued slowdown both in capital deployment and the total number of transactions.
And I want to dissect the report a little bit, namely on the UAE taking the biggest piece of the cake here, but on exits specifically. It's a topic that we talk about in the newsroom quite a lot. Do you think that the region is at a successful place when it comes to exits?
Look, I think it's in a healthy place, but the current situation creates instability and uncertainty. When we look at, we brought out a report actually just a couple of months ago reviewing 5 years of M&A transactions. 25% of all M&A transactions have come from international participants. And so those people want market entry into the region. Are those international players still looking to do that, or are they looking to wait for a bit more certainty before they make those transactions? 50% of those M&A transactions have come from larger tech companies acquiring and consolidating entities within their domains. And so again, where companies are focusing on their business models, unit economics, and trying to navigate the uncertainty, will they be looking for consolidation plays in the next 6 to 12 months, or will that come after a little bit more certainty? And a final one was we actually brought out an MGTI index specifically on IPOs. And it's interesting to see many people are talking about IPOs here in the region. Look at what's happening in the US. But the performance of those IPO listings haven't necessarily given a huge amount of confidence to tech companies in the region to list yet.
Okay, and just finally on the UAE, it's the most funded in the region, but the deals there are concentrated. So what can you tell us about what exactly happened there? Yeah,
so it's interesting. Now, this 6-month period, the UAE has seen the most amount of capital in the region. But similar to global trends, they've been in a small number of bigger deals. 60% have come from Blue 5 Capital. They're a relatively new entity that have been playing in the venture capital space. Investments in Mal, Cargo X, AI companies, but that is still healthy in terms of capital deployment for the region, specifically against the backdrop of the region. But it's similar to what we see globally. Bigger deals in a smaller number of companies with a 60% concentration of the capital that has already been deployed.
And between the UAE and Saudi Arabia, what do you think, or which country do you think is going to start looking a little bit more positive over the next few quarters?
I think just in general, they'll continue to all be positive. If you have a medium to long-term view, we're very optimistic. The challenge is trying to work out what are the challenges right now, and they could potentially be LP funding. So if we want to continue to develop the region, we need to see continued LP funding from both the government sector and the private sector to spur the next generation of startups into the second decade evolution of the region's venture space.
All right, Philip, we're going to have to leave it there, but we look forward forward to the next report about what the war translation into the numbers is. It's Philip Bahoshy, CEO and founder of Magnitt. Now, shares in SK Hynix are tanking in Seoul trading today. This is after the memory chip maker's U.S. trading debut on Friday. Those ADRs ended their first session up almost 13% on follow-on demand after the largest first-time share sale by a foreign company in history. SK Group Chairman Chey Tae-won says that the conglomerate has an ambitious plan to invest more money in the United States, betting that demand for chips will continue to grow. Speaking to us after the landmark U.S. listing, Chey also discussed the potential for additional ADR rounds.
We try to expand our ADR size and also better. That actually requires a better return. So once we have the better return, then there is more demand. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials. And I see that this moment. So this is the AI era. So this AI era is actually spiked at a lot of demand for the memory. So this is a kind of time for us.
A reason to do the ADRs is to raise capital, in part to boost capacity. Your industry peers, Micron, had said very recently they have line of sight to supply improving 2028, the other side of 2027, in part because of the capacity that is coming online. What does SK Hynix see?
Well, we didn't talk to our customers. So we just announced that a few months ago, so we're going to double up our capacity within 5 years. So that means that we've been doing the business more than 25 years. And then with next 5 years, we're going to double up our whole capacity. People see that that's unrealistic and probably the oversupply, and people worry about it. But my customer said that that's not enough. We need it more. So double up is not. It's not enough. Actually, what they want us that we're quadrupling, 5 times, 6 times. So the more is the better, because that demand will be exponentially grow in the future.
Based on that customer demand, what do they see then? If they are the crystal ball, the lens to the future, they believe that their level of demand will stay where it is 2029, 2030. How long does supply tightness respond to that?
Nobody expected, I don't know, what's going to happen in next years. But I'm saying that, I have some confidence that the demand will be grow, and our supply capacity never going to catch up. So I don't know how long, but if I think it's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
That was SK Group Chairman Chey Tae-won speaking with our own Bloomberg tech anchor Ed Ludlow. Now, coming up, oil traders are navigating confusion over the status of the Strait of Hormuz. This is as fresh U.S. and Iran strikes fuel speculation about potential supply disruptions. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. The United States launched fresh missile attacks against Iran on Sunday. This comes as oil traders weigh conflicting signals over whether the Strait of Hormuz is open to shipping. So to discuss what is happening there, now bringing in Bloomberg's Anthony DePaula. Anthony, good to have you on set with me this morning. the Strait of Hormuz, what is happening? Are we seeing a standstill yet again, or are ships just going through but treading with a little bit more caution? What are the happenings?
Good morning, Abir. Yeah, well, I mean, the picture is now that both Iran and the U.S. are saying different things about the Strait. So Iran's saying it's closed, the U.S. saying it's open. So, of course, if Iran is saying that the Strait is closed, that's going to give pause to a lot of shippers. And already last week when we were talking with the shippers, going into the week, people were already cautious. Traders were telling us, traders and sellers of oil and products were telling us that it was difficult to get vessels to come into the Gulf to pick up cargoes, and that was slowing the recovery in exports. Then we saw those that spate of attacks last week on vessels, which spooked traders even more. So traders who need to buy oil in the Gulf, or the shippers who need to send that oil into the Gulf, are not going to be coming in. So they're saying it's going to put them back even more time while they need to observe and see if things get back to normal before they even come in. So this is a delay, clearly. We're already seeing now over the weekend traffic really slowing to close to a standstill. And we had seen kind of that trend throughout last week as well as traffic slowed. We did see one LNG tanker from Abu Dhabi's oil company ADNOC that did appear outside of Hormuz on Sunday. So that one looked to have crossed without its satellite transponder on. So they call that going dark when they turn off the location and try to sneak through. So what we really need to see is whether those kind of voyages continue. We've seen some of the national oil companies in the region, like ADNOC, to some extent the Kuwaitis, pushing their own vessels through, using that channel close to the Omani coast and trying to get those vessels through. So we need to see if those really continue. It's most likely that the independent traders, buyers, and shippers will be hesitant to send their vessels into the Gulf with the risk of attack or getting stuck there.
Okay, and just speaking of the UAE, we have a report from the IEA saying that the UAE's oil output had surged to a record high in June. And so the OPEC exit seems to have panned off for the UAE. What can you tell us about that bold move?
Yeah, I mean, that's something that we've been watching really closely because the UAE has been ramping up production as much as it could, given the current constraints. Once we saw that MOU, that kind of ceasefire agreement take place between the U.S. and Iran, lots of oil that had been trapped in the Gulf came out, and we were expecting to see the oil companies take advantage of that to try to get even more oil out and more production out. According to the IEA numbers, the UAE appears to have done that, ramped up some production. They've been selling oil from the onshore oil fields via a pipeline that runs to the port of Fujairah outside of Hormuz. What they've been doing now seems to be ramping up those offshore oil fields that are in the Gulf. Those load directly onto boats and send the oil out through Hormuz. And so those have really been ramping up. So that is a record for the UAE. Yeah. It even surpasses a previous record that they had during a 2020 price war. After an OPEC fight. So we'll see if there's another OPEC fight coming.
All right. Bloomberg's Anthony DePaula keeping on top of those energy news. Now, coming up, Senegal's debt crisis is forcing the government to cut back on spending, stalling flagship infrastructure projects. We'll have more details on that story next. This is Bloomberg. A hidden debt scandal has derailed Senegal's infrastructure ambitions and triggered a fiscal crisis. This is after a government audit exposed billions in unreported loans. The revelations have forced the IMF to suspend a $1.8 billion loan program and stall the country's flagship commuter train project. For more on this story, we're now joined by Bloomberg's Katerina Hoye. Katerina, good to have you on this morning. Just how are the stalled infrastructure projects and the new taxes really affecting the cost of living for ordinary people in Senegal?
So, I mean, the impact on ordinary Senegalese is mostly indirect rather than people feeling debt crisis itself. The government obviously came to power promising to cut the cost of living, but its fiscal problems have made it much harder to deliver on. IMF funding has been suspended and financing is under pressure. So the state has much less money to spend on subsidies for food, fuel, and even accelerate social spending. And at the same time, it's looking for new revenue sources. So we've seen proposed taxes on mobile money transfers, delays to payments in the construction sector, which we've seen with the regional train system here in Dakar that's been delayed. And this is obviously slowing other infrastructure projects too, and having an impact on the sector in general, affecting jobs. So people aren't necessarily talking about sovereign debt or hidden liabilities, but they're experiencing the consequences through higher cost of living and a government with much less fiscal space than it had expected.
And Katrina, will Senegal be forced to restructure its debt, or can the government convince the IMF to resume its funding without restructuring?
So that's the central question. And at the moment, there isn't a clear answer. The government has repeatedly said it wants to avoid a restructuring because it sees this as damaging Senegal's credibility and also economic sovereignty. But investors are increasingly pricing in some sort of debt treatment. Former Prime Minister Ousmane Sonko, a very popular political leader and turned opposition leader now, who recently strongly opposed the restructuring, has also now softened his stance and said that if it's deemed necessary, it could be an option. Meanwhile, the IMF has made clear that more work is needed. They have asked Senegal to sort its misreporting, and in the independent audits of payment arrears has been requested. So the government is trying to restore credibility without the restructuring, but obviously the longer that takes, the greater the finance pressure becomes.
All right, Katrina, we're going to have to leave it there. Thank you for following that story. Bloomberg's Katrina Hoye with the latest. Now that's it for Horizons Middle East and Africa. Stick around with us for Daybreak Europe. This is Bloomberg.